By popular demand, we have Brian Decker, and today we're going to be talking about cryptocurrency, altcoins, Bitcoin, all the different things, and Brian has got quite a bit of money in crypto.
Right now, my portfolio is sitting at about $5 million. Of that $5 million, I got about in Bitcoin. Last election, we saw Donald Trump and Joe Biden both say crypto is stupid, it's fake, like avoid it. Now, Donald Trump is known as a pro-crypto president. Even Jamie Dimon, who said he would rather invest his money in a pet rock than Bitcoin. JP Morgan is now allowing their wealth advisors to sell Bitcoin to their high wealth clients and working on a cryptocurrency exchange, whereas 4 years ago, he said he would fire any single person that worked for him that ever recommended Bitcoin.
Wow.
That is the shift. And Jamie Dimon and Larry Fink control America's wealth.
Welcome back to another episode of the Austin Zaback Show. By popular demand, we have round two, Brian Decker, and today I want to jump right into it. We're going to be talking about cryptocurrency. We're going to be talking about the bull market that we're about to go into, the parabolic bull market. We're going to talk about some of the triggers that is going to cause that and when you can actually see and expect that to happen. Altcoins, Bitcoin, all the different things. And Brian has got quite a bit of money in crypto. Maybe we'll even get him to share with us roughly how much money he has in crypto at some point. So make sure you stay to the very end. Brian, I appreciate you being here, bro.
Yeah, of course, brother, dude. I appreciate having me back, man. It finally feels good because I know last time I was on here, I was saying some things, and at the time the market, people were like, I was looking at all the comments, were like, this dude's crazy, you know, because Bitcoin was what, 20 or 30 grand last time, and then all of a sudden, you know, we started to get up into the 70s. You don't look like such a crazy person anymore.
For sure, dude. You know? Yeah. We got all the way up to what, 73,000 Bitcoin did?
Yep.
And then now we're hovering at, like, at the time of recording right now, we're hovering at like 60,000.
Yep.
Yesterday, we bumped up to like 62.5. So I want to kind of dive into it, Brian, you know, and like maybe just kind of give me just a short backstory of like, when did you get into crypto and become so passionate about crypto? Like, what led you to this like market of cryptocurrency?
Yeah. So I'm one of those people when I was younger, my background was obviously in accounting and finance. And, you know, I wanted to be a stockbroker. That's really what I wanted to do. But just didn't come from a family that had the money or the connections to really get on Wall Street. And it's not when you're from Riverside, California, working on, Wall Street isn't exactly a super big reality. But my brother was a tech nerd. And my brother was one of the very first people that started mining Bitcoin way back in the day. And he always tried to get me to invest. He's my younger brother. And I told him he was crazy. Well, finally, I threw some money into the cryptocurrency market like many of us did in 2016, like 10 grand or something. It went up to like 80 grand or whatever it was. And like so many people got greedy and it cleaned my clock and it went, to pretty much nothing. And so I kind of pushed it off and really didn't get back into the market. And then I had an exit of a company and ended up getting, several $1 million from it. And at the time, I didn't really need that money to live off of. It was kind of more of like, hey, I never thought I'd have this much money ever in my life. I can't screw this up. And so I really dove into it. I kind of had the Michael Saylor moment that Michael Saylor had of like, shoot, I can't keep this much money in cash. And even though it wasn't $1 billion like Michael Saylor, for me, it was the equivalent amount of money. And so I went down a rabbit hole. I think like most of us that are entrepreneurs, we have ADD, right? And so to keep my mind busy, I went down a rabbit hole and I came to the conclusion. And I said, hey, you know what? This is our generation's opportunity to have a .com situation. It is, my grandparents had the opportunity of the real estate market, right? So, and the generation before then, they were in the gold rush times, right? So every generation has something. And the majority of people don't realize that opportunity until it's gone by. They wait for if there's not risk, there's not big reward. It's just the way it is. And so I broke it down and I was like, there's only 21 million of these things. It probably should have died by now, given if it's just some magic Ponzi scheme. It keeps coming back. We're getting more people interested in. So I went down a crazy rabbit hole, like many of us that go down. I started looking at the people that were in cryptocurrency. And there was a survey that was actually done by MIT that came out in probably 2020. And they surveyed like a couple thousand cryptocurrency owners. And they found that their IQs were 30 points higher than the average person, which I was like, dang, okay, that tells me something. Their net worth was significantly higher than the average person. So I started thinking to myself, what do these guys know that I don't know? And sat down, and I used to trade stocks quite a bit. So I knew charting really well. And in college, I double majored in accounting and macroeconomics. So I kind of had the whole background. It was just a different investment that followed the same charts that I had known so well. And I just went in crazy because I was like, when you make that first house flip and you're like, if this thing doesn't work, I am wrecked, And so I was married with 2 kids at the time. And I was like, my wife thinks I'm crazy for like putting 80% of our liquidity in what she thinks is a Ponzi scheme. I have to make this work, or I'm not going to be able to show my face around my family. And so I went super crazy and deep. And the benefit was, at the time, there wasn't that many people. The same opportunity you had out here in Arizona. You started flipping houses before the crazy boom of all these people that came here. You just saw it, and you were also just happened to live here. So you had that opportunity. So it was the same for me in crypto. I just was in an area before it really started to catch on. So I had that early adopter mindset, and then it changed my life. You take $1 million and I put it on social, and everybody kind of watched me turn $1 million into $7 million in the last cycle. And then I was like, okay, I'm going to do this again. And that's kind of my whole purpose is our system makes people lose. You work, you get taxed on it. You take your money that you get and you go buy real estate or stocks, you get taxed on it on your profits. And so we are in this constant thing where we just can't beat the system. Well, Bitcoin was the one thing that you and I could buy before Wall Street legally. It's the only time it's ever happened in realistic history. So I want to tell as many people as humanly possible, you don't have to be a crypto crazy person like me, but you owe it to yourself to have a small percentage of your portfolio exposed to the best performing asset in human history.
So powerful, dude. I love listening to you talk about it. Man, we're going to dive in deep right here. So you turned 1 million into 7 million in the last cycle. Brian, what is your goal for this cycle that we're about to go into?
Yeah. So what I do is I pull out of the market, and then I leave a certain amount in for my long-term retirement bags because I don't look at it like on a daily basis or a weekly basis. So I kind of segregated my portfolio. So right now in November, starting in February of last year through November, I deployed about $3 million into my, I call it like my quick turn account. It's my in the cycle and I pull out of the cycle, right? So my goal is 3 to 14 this time. So
what is that? 4x?
Yep.
4.2 maybe, something like that. Okay.
Exactly. And the reason why, I know people are like, well, I heard about 20x in this. Here's the category. In your portfolio, where most people get wrecked is they chase these crazy long terms. They take too much risk in their portfolio and they treat it like anything else. Nobody would go buy and try to flip 50 houses at one time in Compton.
No.
You would never do that. But yet when it comes to crypto, you got to think of it like it's an entirely different asset class. So I structure my portfolio where, sure, I have high risk stuff that could give me a 50x, but it's 5% of my portfolio. And so I know based on where institutions are investing, the projects that they like. And the beautiful thing about crypto is that why it's such an awesome thing. Every time somebody buys a coin, somebody times invests, sometimes move it, we all get to see it. It's the beautiful thing about open source. So imagine if you could see where every hedge fund was buying real estate the second that they bought that real estate.
It'd be a beautiful thing. So, everybody would just mirror and do what they did.
Exactly. And you have that in crypto, and it's not even hard to understand this stuff. And so that's my goal. And what I do is you have to have an exit strategy because greed is a real thing, right? When you start making that money, and most people don't understand, we hear about crypto cycles lasting a year, year and a half. Yes, the bull run does, but 95% of the gains of a bull run happen within a 120-day window. Okay. So imagine in real estate, how hard it would be if you're like, hey, over the next 4 years, real estate's going to go, you buy this house, it's going to go from $100,000 to $800,000, but you only have a window of about a month to sell that $800,000 asset and get out of it. right?
And you have to recognize when you're even in the window.
Yes, that's the hardest part.
Right.
But the beautiful part is myself that I've learned and studied, I know that window. And later on, I'll tell people where I believe that window is and exactly, even if they're a brand new trader, where they could go to see that window.
I love it. Yeah, I can't wait to dive into that. Before we do, I'm curious too, Brian, can we talk a little bit about the difference between the cycle we're going into now and the last cycle, specifically when it comes to institutional grade money coming into the ETFs and all of these big, BlackRock. I want you to maybe talk a little bit about that and unpack, what does that mean for the crypto industry? I mean, countries are buying Bitcoin.
Yep.
Right? How do you look at that? How do you view that?
Yeah. So the way you got to think about it, I like to go, human beings, we act the same way. Your grandparents had the same feelings you did at your age, right? Human beings, we act the same way. And most people don't understand, hey, you know what? Yeah, we have crypto right now that's brand new. Nothing ever has acted like that before. Trust me, when the stock market came about in the 1920s, don't you think that people then were like, what do you mean I can own a piece of paper that allows me to own some of this company? That sounds real sketch, right?
Guaranteed.
And then once again, we then saw tech companies and they were like, wait, there's this little thing called the internet. It doesn't have a physical store, and this little book company is going to change the world. You crazy. I'm going to go to Barnes & Noble. I'm going to go to Target. Who is ever going to want to do that? New technology, it takes a while to get adopted. And so when you look at crypto, when it first came out, it was written by a guy who nobody knows. Think about that. Hey, there's this new thing that was created on the internet by this guy named Satoshi Nakamoto, who nobody knows who he is.
It might not even be, it might be a group of people.
It might be a group of people. And he created this thing. You're going to put money in it. You don't get anything for it, but a little number on a screen, and it's going to change the world for money. People be like, dude, this is the craziest, stupidest, biggest Ponzi scheme ever. Well, then what you had happen is we saw in the last cycle, we started to see Elon Musk buy crypto. You started to see companies like Michael Saylor start to buy. So you started for the very first time ever getting publicly traded companies acquiring Bitcoin and putting it on their balance sheet, right? And so that was a big shift for me. And most people are like, well, but Elon Musk, he's kind of out there. Michael Saylor, he's kind of weird. Well, then what happened, and I came on the show and said before it even came out that we're going to get this thing passed. If my memory serves me right. But what changed was you have to look at Bitcoin is working now and getting adopted because it's needed. Okay. Bitcoin was not needed prior to the financial crash. You think about it this way, it took us 220 years in US history to get $1 trillion in debt, right? It's taken us the last 25 years to add $30+ trillion to that, right? So what we now know is that our dollar's backed by nothing, and the government is printing more than we possibly know, and so is every other world. They're just printing money with nothing backing it other than trusting that we can take it to the store and they're going to give us a good that represents the equal value of that, right? So what ended up happening is you had a company, BlackRock, right? BlackRock, $10 trillion in assets under management. They are the biggest company in the world. They literally own the United States, right? Even though nobody admits it, trust me, they own the United States because they have a record of 576 out of 577 times they've wanted to get a new asset trading on the stock market, and the stock markets made it happen. Okay. So they own the United States. So what you had happen was the largest asset manager in the world, who previously Larry Fink said it's a complete Ponzi scheme. Now he has it traded on Wall Street, and it beat every ETF's performance in US history, meaning it got more than $1 billion invested in it in the shortest period of time. And it's the best performing ever on the United States Stock Exchange ever since launch. You have BlackRock now, who they own $20 billion in Bitcoin, and they bought it all in the last 6 months. Okay. So right there, we saw that move. Then last election, we saw Donald Trump and Joe Biden both say crypto is stupid. It needs to be, it's fake, avoid it. Now, crypto is at the point just in the United States society that Donald Trump is known as a pro-crypto president and is moving up in the polls. And the cryptocurrency market, anything when he starts losing to Kamala in the polls, Bitcoin and crypto starts to go down. Okay. Then you had Kamala getting wrecked in the polls. She and her entire regime literally is known as the anti-crypto, and people love their crypto way more than they love their politics.
Yep.
She's had to come about and do an about face, and now is going to be running, mark my words, by the time this airs, you're going to see Kamala Harris with crypto campaigns on something that she said, crypto's fake, it's a Ponzi scheme, all these things. So we have completely seen the shift in the world. Even Jamie Dimon, who said he would rather invest his money in a pet rock than Bitcoin, JP Morgan is now allowing their wealth advisors to sell Bitcoin to their high wealth clients and working on a cryptocurrency exchange. Whereas 4 years ago, he said he would fire any single person that worked for him that ever recommended Bitcoin.
Wow.
That is the shift. And Jamie Dimon and Larry Fink control America's wealth. So that change tells me something's happening. And most people don't realize that Morgan Stanley, one of the most conservative financial institutions, so on their wealth side, they control about $2 trillion in assets, okay? They now, this week when we're filming this, so first week of August roughly, they just made it so that all 15,000 of their wealth advisors can legally recommend Bitcoin to their families. And it's the stance of Morgan Stanley that digital assets in some level of exposure belong in everybody's portfolio. So I did the math. If they just invest 2 to 3% of the assets they have in management over the next year, based on the supply of Bitcoin, it moves Bitcoin's price $118,000.
Wow.
That's Morgan Stanley. Now you have UBS. So you can just imagine this as it takes over the world, which is how Michael Saylor got to his $2.9 to $7 million per Bitcoin by 2045.
Yeah.
Like, that's crazy. These guys are 60 and 70 years old and they're changing. Like,
It's insane.
It's nuts.
Michael Saylor just did the Bitcoin conference. I watched his speech. It was like a 45-minute speech. He was saying the bear case was a $68 trillion market cap by 2045.
Yep.
To put that in perspective, we're at what, 1.2 trillion
Yep.
right now? Gold is what, 15?
It's like 12, yeah.
Okay, 12, 15 trillion. Gold market cap. When do you think, Brian Decker, when do you think that Bitcoin will surpass gold in market cap? What year?
We're 2024 right now. By earliest 2029, latest 2032.
Wow.
Yep.
Yep.
Because think about it. Think about this. They have now figured out a way to artificially make gold that you cannot tell the difference between real gold and this artificial gold. The only reason it's not hitting the market yet is because it's more expensive to produce it per ounce than it is to buy gold at its current price. You can't make Bitcoin. It doesn't work. You have all these other cryptocurrencies out there. So we have that taking place. And you and I'm 42, and what are you?
29.
29. Okay, right? So think about it. Are we going to want to own gold or Bitcoin more?
Bitcoin.
By far. It's easier to buy, easier to store, everything you can do about it.
I've never even owned gold.
Me either. I own it in an ETF that I can buy in a stock, and it's like 1%, right? So you think about it. We're having the largest wealth transfer in history of baby boomers to me, right? My parents are in their mid 60s. Most people's parents that are in their 40s are probably in the 70s. When they pass away within the next 10 years, let's say, that money goes to me, right? They're the last people that really love gold, right? I'm going to take that. My parents pass away and my parents, they own some gold. First thing I'm doing is selling it and putting it into Bitcoin.
For sure.
Right? So gold will always have a place, but you look at the difference. You have Peter Schiff, who's known as the gold bug. Peter Schiff is in his early to mid 60s. His average clientele is 72 years old. Okay? You look at that. 20 years best case scenario, they have gold itself over the last 10 years is up 4% annualized.
Wow.
Bitcoin over the last 4 years is up 55%. Gold, not a fixed supply. People find gold all the time. You're never finding more Bitcoin out there. So it could be sooner than that, but my prediction would be next cycle, earliest, worst case, one cycle after.
Do you follow the power law as it pertains to Bitcoin? And do you believe in that?
Yeah, I do. And I think one of the things that people also have to understand is I know many people's, thought about Bitcoin for a second is they don't understand the fact of is what is it, right? Like, what is it? They don't understand. So what you have to understand really with Bitcoin, and kind of feeding into your question, is Bitcoin does three things. Number one, Bitcoin is a technology, right? It's a network that allows people to transact on that technology without needing a bank, right? Like right now, if I want to go send you $1 million, what's going to happen is I'm going to order it from my Bank of America account. My guy's going to call me and be like, I need you to go through a bunch of security questions. This is a big wire. Where are you sending it? Have you ever sent it to him before? This whole pain in the butt. Then it's going to go, it'll go to the Fed wirehouse. It'll go to you. I'll pay money. You'll pay money, and it'll sit in your account. And then it's going to put it on hold in your account, and you might have access to it in 7 days. So I have to ask two people to let me transfer my money to you, right? So one, it's disrupting through that it's changing that from the SWIFT system to obviously the Bitcoin network. So it changes the technology. Number two is it's a monetary system, right? It allows me to take something of value in my account and give it to you in your account. And number three, it's decentralized. It's basically a new form of money because unlike every other asset out there, not only does it make it easy to transfer and it allows me to take a store of value, but the degradation of that asset, the ownership costs, right? Like you and I own real estate.
Yeah.
Real estate's great. Don't get me wrong. It belongs to everybody's portfolio. But there's a reason why the average investor, so if my grandfather buys a real piece of real estate and he transfers it to my dad, he transfers it to me, the average real estate asset from an investor is around 16 years. Okay. The longest one in United States history is 174 years, as Michael Saylor talked about, King Branch. Why? Because property taxes average 1.1%. Then I have my insurance that goes on it. So if I look at it from that perspective, and let's say my cost of ownership, even if I self-manage it, somewhere around 2 to 3% per year, right? That means after 33 years of whatever I put into that asset, my initial capital is all gone in fees and taxes, right? Now, if I look at Bitcoin, if I keep it on exchange, it's roughly going to cost me 0.1% per year, okay, right? That's 1,000 years it's going to take in fees to eat away at my initial investment. If I self-custody it, it's 0.01%. Now it lasts me 10,000 years before my initial asset. So when you look at it from that perspective, there's not a single asset in the world's history where I can put my money into it and whatever my initial principal I put into it, the cost of owning that asset allows it to not be eaten up by fees and cost of ownership with anything less than like 100 years to 150 years. And so when you look at the power that that carries as an asset and the preservation, and I'm not saying go 100% into Bitcoin. I'm not saying that at all. Now you get the crazies like Michael Saylor, and honestly, I'm kind of one of the crazies. I mean, probably 80% of my liquidity is in crypto, but during the cycle, it's not that way when we're outside a cycle. But like, what else could possibly do that?
Yeah, 100%. For somebody watching right now, Brian, that is looking at, IBIT, right? IBIT, which is BlackRock's ETF, and they're looking at maybe some other ETFs. What do you think, like, who's the avatar of somebody who should just buy, like on Webull, they should go on Webull and just buy 100 shares of IBIT versus self-custodying actual Bitcoin and getting like a wallet? Like, what type of avatar are you seeing doing that versus that?
Yeah, so two things. So one, I own both, right? And let me explain when you should own, what is the advantage of owning it in each one of those instances, because everybody should own both, okay? Now, most people won't own both, but everybody should own both by this way. So you look at a Roth IRA, right? Okay, Roth IRA, it's pretty much the only time that the IRS really allows you to take money that you make and put it in a specialized tax-protected account that allows you to invest that money, grow that money tax-free, and withdraw that money tax-free, right? Which is crazy on compound interest. Now, of course, there's income limitations and all that, but even that being, you can get other ways. I won't get crazy into it with backdoor IRAs and stuff, but what you now have is you have a way in your retirement account to invest money into an IBIT, which is, you have Fidelity that does it, Schwab that does it. You can buy it at any brokerage. So in everybody's Roth IRA, my personal opinion is a minimum of 25% of your Roth IRA should be allocated to Bitcoin. Minimum, okay? Now, why is that? So let's just look at it. Let's look at a case like this. So we're going to go in and I'm going to say the average person listening to this is 30 years old, right? And they want to retire by the time they're 65. And they know that to really retire, they need $10,000 a month in today's dollars. When you factor in the cost of living, when they retire at 65, which would be $2,059, that's roughly in the ballpark range of about $26,000 a month to live this lifestyle of today. That's what inflation does, right? And people are like, I don't know. Okay, go 35 years back and look what your house was worth. Go look what your car was worth, right? It's a reality. It just 2 to 3% per year doesn't seem like a big deal. But guess what? You do that over 35 years, it's a big deal. So you look at that and we say, okay, that's $11,000 a year that they need to invest starting when they're 30 years old in the stock market, which we say, let's say a 9%, 10% annualized return. They'll get to $5 million by the time they're 65 and they could live in doing that. Boiling it down, it's $900 a month. So Austin, say you're 30 years old, you invest $900 a month every single month. And you, as your income grows, just increase it by 4% per year. Okay. So $900 a month right now, next year, $936 and put it away. When you were 65, you will have $5 million in your account if you just invest in the broad stock market and you'll be able to live like you make $10,000 a month. Now, everyone's like, okay, that sounds good. Now let's just imagine this. Instead of investing $900 a month, take an extra $250 a month and put it into Bitcoin. Okay. So $900 a month in stock market, $250 a month in Bitcoin. Bitcoin over the last 5 years or 4 years has averaged 55% returns annually. Sure, it goes up 200% and drops 70%, but it doesn't matter. 55%. We look back 10 years, it's like 160%. But let's use the law of diminishing returns and let's just say, hey, over the next 35 years, Bitcoin averages a 20% annualized return.
Super conservative.
Super conservative. Yeah. Okay. Twice that of a stock market. It's a fixed supply. I bet my life it's going to be 20%. $900 a month in the stock market plus $250 a month in Bitcoin, increasing each by 4% per year with your income grows up. That $900 grows to $5 million in 35 years. That $250 a month grows to $12 million. Wow. In 35 years.
$17 million.
$17 million. You'll be able to, if you withdraw 4 to 5% per year, you're bringing home $99,000 a month.
Wow.
Okay. So when you look at it like that, every single person should be putting in at least $250 a month into Bitcoin. 100% minimum, put it in, use your Roth, use your 401k, use your traditional IRA, whatever you want. Every person should do that at a minimum. I don't care if you're 55 years old. Now, who should take self-custody of it, right? So it's the same way I look at this. Many people, when they buy things, right? Let's say they buy real estate, right? You know, in real estate. Some people, when they want to invest in real estate, they invest in REITs, right? Real estate investment trust. You buy this stock, this company owns a bunch of assets, you get a dividend and be able to do that. So some people are like, you know, I don't want to deal with managing properties. I don't want to deal with it. We all know you make a lot more money flipping properties and owning real estate than you do just investing in a REIT. But it's still good to invest in a REIT. It's just a different type of investor. Now, if you are somebody that wants and is willing to just do a little bit extra work, just like how you're going to do a little bit extra work buying that property and handing it over to a management company, same thing with Bitcoin. You go in, you buy Bitcoin on Webull or you know, Coinbase, and if you use Coinbase One, you get for $29 a month or $19 a month, something like that, you can invest up to $10,000 a month into Bitcoin for no fees. Buy or sell, right? So you go in and do that. You buy it in Coinbase, you buy it in Webull, you go on Amazon, you buy a little ledger, right? Looks like a USB drive. You literally, your ledger is a 20-digit or 20-word code. So it doesn't even matter if you lose your ledger, right? You can, as long as you keep your 20-digit code, keep it in a security deposit box. You buy the Bitcoin on Coinbase, and you literally, as easy as sending an email, you copy your address from here, you send it to your Ledger wallet, and it's on your Ledger wallet. And if you lose the Ledger wallet, no big deal. Buy a new Ledger, re-enter in your 20-word code, and you own it. Now, no matter what happens in the world, and I'm not like a doomsdayer, but you own real estate, I own real estate here. What just happens? Let's just say worst case scenario, in 10 years, there's a civil war that breaks out. Right? Just say whatever happens, right? And our economy's not doing so good. The world's not doing so good right now, right? you're screwed. You're going to have to sell your real estate, which is not a very liquid asset, right? Get that to try to leave the country or do anything you want or just move, right? On that little ledger, I tomorrow could literally be like, hey, Ali, guess what? Everything's crashing. We're getting on a plane. We're flying over. We're going to go to Costa Rica. Don't worry. I have $8 million sitting on my ledger that I can go anywhere I want in the world at any moment in any time and go in and be immediately plugged in without having to get my bank versus going to my bank. Now, mind you, I keep money in the bank. I'm not saying that, but that's imagine that power, right? Imagine an instant button on your phone, sell my real estate, immediately get it, and you can go anywhere in the world. That's what Bitcoin is.
So powerful. So powerful. Now I want to talk a little bit, Brian, about how much, in your opinion, you look at Bitcoin, and for anybody who may be brand new, right? Bitcoin is the number one cryptocurrency, right? And then you have altcoins. And how many altcoins are there roughly?
There's something like 21 million.
Okay, so a ton of altcoins, right? So how much of your portfolio, where you're talking to other people and then maybe yourself too, when you look at a well-diversified portfolio, in your opinion, how much are you having in Bitcoin, like a percentage, 20%, whatever, versus altcoins? And then getting maybe a little bit into the altcoins of like, what sectors of altcoins are you really focused on right now?
Yeah, no, I think it's a great question. So first off, the way I look at my portfolio is you've got to, just like with real estate, when the market is, let's say, booming in an economy, somebody may own a little bit more Airbnbs to capture that market versus a market like a recessionary period that we're going into. Maybe they'll be buying a little bit more longer term investment properties, right? Because you gauge the economic cycle. Nobody's out there right now, when we know that Airbnb just reported a crappy earnings report, going out there and just buying every Airbnb possible like they were in 2020, right? So what you're looking at in the economic cycle, and the way I look at my portfolio, I say, okay, during the year of a Bitcoin bull run, what does my portfolio look like? And then outside of that year, for the other 3 years of a cycle, what does my portfolio look like, right? So when I'm outside of the Bitcoin's 1 year, like the big bull run we're in, about 85% of my portfolio is Bitcoin, because Bitcoin is less volatile. It just holds that, and it's a very stable asset in terms of relative to the other cryptocurrencies.
Sure.
Right? Or I'll move some to cash. So I only have about 20% in altcoins. Right now in this market, I'm about 20% Bitcoin and 80% altcoins. Now, why is that? Is because, give you a case in point, let's look at Ethereum, right? Okay. So Ethereum in the last bull run got up to $5,000. And then during the bottom of the bear market, it got down to like about $900. Okay, right? So it lost, roughly speaking, about 80% of its value. Bitcoin peaked up to 69,000, and like the worst it got for a couple days was like 15 to 20,000 bucks, but pretty much been hovering the whole cycle between 20 and 30,000 bucks, right? That's where it kind of hovered. So my drawdowns were not nearly as much. It's a more durable asset. It's a bigger asset, just like no different than in stock. And Nvidia goes down a lot less than some penny stock goes down in a crash. So what I do now is I take all that money in that I had in Bitcoin, and when I go into this cycle, I rotate a lot of that into altcoins, and I buy them near the bottom. Not because I like them more than Bitcoin, but they're a smaller market cap, and it takes a lot less money to move the price exponentially. So right now, I'm currently holding, and I have no problem sharing stuff on it. So right now, my portfolio is sitting at about $5 million, right? Okay. So of that $5 million, I got about $1.2 million in Bitcoin, right? The other 3.8 million is spread out on altcoins, but they're not all equally weighted in terms of like, I'm not like, oh, there's 20 altcoins I like, let me just put 300 grand in each one of them, right? So what I look at is just like, I treat it just like a stock portfolio, right? Somebody's stock portfolio, they're taught to have a well balance. You're going to own some energy stocks, some utility stocks, some tech, the same thing. No different than what I'm going to do in this crypto cycle. So for me personally, if I had a gun to my head and said, you got to invest in one thing that has the highest probability of having a 3 to 5x from where it's at right now, and you believe it's a 95% certainty or more, what are you picking? Solana. 100%. So my number one holding is Bitcoin. Number two, and it's almost identical, probably 20% of my portfolio is in Solana. Now, why Solana specifically is you have to understand, just like stocks, like I said on here before, every cryptocurrency is not trying to be money. They all have a different purpose for what they're doing. They're just no different. Like we used to have a C Corp to have stock shares like we talked about. In crypto, you just have a DAO. So instead of them issuing stock certificates, they issue crypto coins. Well, what Solana did, which is brilliant, you got a Solana and you had Ethereum. We all know about Ethereum. Well, what Ethereum did, if you're going to think Bitcoin's gold, Solana is like, Ethereum would be like the internet or would be like oil, right? It makes everything kind of move in the world. Well, what's happened to Solana was Solana got ripped down because we've all heard about Sam Bankman-Fried and the big Ponzi scheme with FTX. Well, he was a massive holder of Solana. It was one of the biggest holder of Solana. Well, he got arrested. They liquidated his portfolio. So it slammed the price of Solana down to like $10 from over about $300 in the last cycle. Well, Solana, most people thought it was dead. Well, here we are about a year and a half later. Solana has more transactions daily than Ethereum on it. It has got way more users than Ethereum on it. And if I'm going to go do a transaction, so let's just say whether it's gaming or even if it's, let's say NFTs or just any type of transaction that somebody's going to do. If I do it on Ethereum, that transaction is $20. So imagine you had Ethereum ATMs and you wanted to go out there and you wanted to pull some money out and that ATM fee was $20 to take out whatever money it was. Now imagine that there were Solana ATMs and you went and took that out on Solana and it was 7 cents. Okay. That's the difference between Ethereum and Solana. And not to mention when you went to the Ethereum ATM, it took 15 minutes of standing there till it spit your money out. Solana, it took 4 seconds. Okay. That is the difference between Ethereum and Solana. And also on top of that, because of those high fees, there's not going to be a lot of people that are going to be using those Ethereum ATMs, right? Unless the Ethereum ATM, the only thing you could do on that Ethereum ATM is maybe that's the only way that you could actually withdraw money out of your savings, right? Let's just say. Well, okay, that's fine. It's a small market, but a majority of people are going to do that. Well, that's what Solana did. So every time you see any type of company that wants to do anything at scale and use blockchain technology, Solana's that choice. And that is why they went from almost a dead project to now, and just give you people perspective, Ethereum does more transactions on a monthly basis than Visa.
Wow. Okay. I didn't know that.
Yeah. Solana does more than Ethereum. Okay. So that's how many transaction fees that are being done. Now, Solana is also, they just launched an ETF for it in Brazil. There's already an ETF in the United States that they're working on the way getting it through. So you got Bitcoin, Ethereum, and Solana are your assets that we have institutional adoption for. People want this, right? So everybody, if I was going to say, even if they wanted to keep it very simple and they want to say, oh, this portfolio, give me 5 projects that I could buy, Brian, to have a good balanced portfolio. And I want to have them kind of spread out. Same way I would tell you with your stock market. I would not tell everybody in the stock market if they had to buy 5 individual stocks. I wouldn't say, go buy Microsoft, Meta, Google. I would not pick them all in a technology sector, right? Because all my eggs are in one basket. Well, if I'm going to look at it this way, what I love to look at, and I don't mean any offense, but it's just kind of a term that Netflix did. You got to look at dumb money. Okay. It's what's called, right? So got to think about it this way. Crypto is not like the stock market where it's making money. Nobody in the stock market is buying a stock just because they're like, well, you know what? I'm buying the stock. It's just a pure gamble. No, they're betting on it because there's a dividend play. There's these other things. Well, the cryptocurrency market, it's speculative. Now, mind you, these projects have real value. They're making real money, but at the end of the day, they're still early on, right? So what we like to do is I like to say, okay, what projects are on Coinbase where the random guy that when his barber tells him that Bitcoin is at a new all-time high, he's going to pull up Coinbase, he's going to scroll through it. What is he going to buy? Yeah. Right? That's what you need to be in. Sure, there are these API 3s and all this. They ain't going to buy that. Yep. And the reality is when you go into a casino, all you're doing, the casino's not paying you its profits when you win on the table from its room revenue, right? Ain't happening. No. Doesn't work like that. Simple money in the pot. It's like sports betting. Yeah. You have a winner and you have a loser. For every dollar that I'm making, guess what? I'm taking that dollar from somebody else that sat at that table. That's the way it works. Crypto's no different. So when I make money on crypto, that means somebody lost that equal amount of money in crypto. That's the way it works. So who do I have the best chance of taking their money? Newbies going into the market, buying projects that they know nothing about, buying it at the peak of the market. Where are they going to pick? So if I'm looking at Coinbase, what coins are going to be most clicked by newbie investors. That is where I want to invest part of my portfolio in. Why? Because when I'm ready to sell, they're going to be still hitting that buy button, right? So number one, everybody knows about Bitcoin, right? That's easy. So the number two holding is Solana. Okay. Number three holding is Ethereum, not because I'm so in love with Ethereum, but they have institutional adoption, right? So number three would be Ethereum, my profile. Number four is, we would probably all agree that if I was going to go back in time to you a year and a half ago and I say, hey, Austin, pick one stock you're going to invest in. You probably say NVIDIA.
NVIDIA, yeah.
Right?
All day, every day.
What is NVIDIA? AI.
Yeah.
Right? So I need to have a project that has AI in the name, or people are familiar with it with AI, because they're going to think in their minds, oh my gosh, AI ran in the stock market. I didn't get NVIDIA. I'm going to get it here. Right? So people really, when it comes to AI, you got a couple different plays. So your biggest play in AI is render. Okay. Right? Render, for people very simply understood, is just like how in AI we hear right now, there's a problem with computing power, right? Like that's a big problem with these new AI chips. The old chips, they're not fast enough to process AI machine learning. So that's why the NVIDIA chip. That's what made AI possible, is the new NVIDIA chips, because they're so powerful, right? Well, the same thing in the world of cryptocurrency. Render is an actual technology that allows, say you have 100 computers in your office here. When your computers aren't being used at night, what you can actually do is sign up for render. And when your computers aren't working, it can use your processing power to allow other people to borrow that processing power to help them do things, right? So for an example, it's already being used by Disney, Marvel Studios. You can imagine like the new Avengers movie or the new Deadpool movie. You know how much computer and CG it took to power to do that? So now, if you were just doing that on a centralized computer, it's going to take you a long time to render that, right? Well, imagine if Disney could click a button and be like, hey, give me every available computing power in a 50-mile radius that I could use at night, and I'll just pay them for their computing power. They're not using it at night. They want to make some extra income. Well, that's what render technology did. And it's founded by major people. I mean, you have Marvel Studios as an investor in it, J.J. Abrams from Robot, like all these things, huge investors. So render also just partnered up with Apple with their Vision Pro and all of that, right? So render is going to be a really great AI play. You can also want to look at things that say AI in the name, right? So there's a company called AIOZ, and what that does is that's basically a network that allows AI people to test their algorithms to make sure it works, right? So you can look at that, or another big one that most people know is Akash Network, right? So any of those three, all available on Coinbase, all are very familiar. If you Google AI crypto, all those three are going to come up. So I would definitely own one of that, right? And the other thing that most people think about is you really have two other sectors to look at. Number one is I don't care what people say. If I went to the street and I said, hey, outside of Bitcoin and outside of Ethereum, do you know anybody that made a lot of money on crypto? I've done this. Here's what people say. Yeah, I do. What'd they do? Shiba or Doge?
Yeah, Doge, dude.
Every time they do it.
Yeah.
So human beings repeat the same patterns. So everybody out there is like, this is my year to get a Doge, right? But Doge, it's not as popular. What's popular right now is Whiff or Pepe, right? That stupid little frog that we all see all over internet, Pepe meme. So when people go on there and they're going to scroll through, they're going to look at meme coins. They're going to look for pictures they recognize. Oh, I know that little frog. Bing, and they're going to buy it, which is why Pepe got up to a $5 billion market cap already, and it wasn't even around in the last cycle. So you got Pepe, you got Whiff. Now, I'm not saying take 20% of your portfolio. I have about 10% of my portfolio in meme coins. It was really only invested a couple percent, but it's grown. Those people are going to buy that. So I want to be where dumb money is buying, right? And then the last one I want to look at is there's something called real world assets. Easy way to explain it is this. Imagine if there was a cryptocurrency on Coinbase and you bought that cryptocurrency and it directly mimicked the price of NVIDIA stock, right? Okay. People want to interact in one single user interface. People don't like, why do people use Robinhood that are our age? Because you can buy crypto on it and you can buy stocks.
And the user interface, it's simple.
Simple, right? So what tokenization is very simple. All it does is take the value of an asset and create a token that actually owns that asset. So let's say you go in, they create a NVIDIA token.
Yep.
For every dollar of the NVIDIA token I do, it buys $1 of NVIDIA stock on the stock exchange. That process is called tokenization. Very, very, very simply put, that's what it does. So this segment, just imagine if you could go into Coinbase, and in Coinbase, you want to buy gold, you click the gold coin. That process is called real world assets. You're taking a real world asset of gold and you're making its value be mimicked in a cryptocurrency. That is what BlackRock picks is the most robust sector that cryptocurrency will ever pick. That sector right now is worth like $10 billion of cryptocurrency. BlackRock's prediction is within 8 years, it'll be $1 trillion market cap for that sector.
What is that at? 100x?
100x.
100x.
Okay, right? So within that, there are two projects that dominate the space. Number one is Ondo Finance. So what Ondo Finance does, and this is that project for everybody. You want those 5. So it's Bitcoin, Ethereum, Solana, pick an AI or 6, pick an AI token, pick a meme coin, either Pepe or WIF, easy, and then a real world asset, those 6. Now what this does, what Ondo does is, it might not seem weird for us, but we all remember when interest rates started going up, people started buying US treasuries because instead of putting your money into a US treasury and getting 1%, all of a sudden US treasury were paying 5% because interest rates went up. It's great. Everybody's savings accounts went up because they hold treasuries. However, that's a luxury we have here in the United States. People, for an example, in Turkey cannot invest in US treasuries. Turkey, you go put money in the bank and guess what? A year later, it's worth 5% of what you put in there because their dollar and their currency is crashing. So what Ondo did is Ondo created the technology that can buy US treasuries on the market, tokenize it into an asset. And now Turkey, China, Russia can all buy that. And it's just like buying a US treasury. That tokenization was made possible by Ondo Finance. Ondo Finance is that platform that does it. That's why BlackRock has been loading up on Ondo Finance. So it's an unbelievable way. And just simply put, without confusing, Ondo Finance, Pepe or WIF, Render, AIOZ or Akash, Ethereum, Bitcoin, and Solana. My personal belief is from right now, say somebody put $10,000 into that. Worst case scenario, I think that portfolio does a 3.5x to best case scenario conservatively, a 7x between now and end of spring next year.
Yep. So like May, June, 2025.
Yep. Exactly.
In your opinion, just to touch, because real quick, a lot of people have asked me, and I'm curious. In your opinion, Bitcoin, okay, going back there just real quick.
Yeah.
What do you think will top out at in this cycle? And like 150 grand, 200 grand, what in your opinion?
Yeah, 100%. And I said it before, I don't have a problem. I think a lot of people are afraid to do price predictions because they're afraid to like come back on and do it. Like if I'm wrong, I'm wrong. Who cares? At least I took a shot, right? You know what I mean? So when we look at Bitcoin, most people just make a guess and their guess is based on where they want it to go, right? That's the way it is. So what we like to look at, what I look at is I go back in cycles. So you got to think of it no different. We have a 4-year cycle. We have the first cycle, second cycle, third cycle, fourth cycle. And the way it works is the bigger an asset's value you get, the more money it takes to move that price up. Law of diminishing returns, right? So when I look at the first cycle, it was like a 35 to like the real true first cycle, like 35x, okay? Then you look at the second cycle and it did like a 10 to 13x. Then you look at last cycle, it went from 19,000 to 69,000, so about a 3.5x, okay? So we're seeing these typically get cut down by about a third, like 2/3 or about 1/3 of that value, right? So if I'm looking at that, so instead of doing, let's say a 3x, last or 3.5x last time, say a law of diminishing returns, it does a doubles to, 175%, right? So if I'm looking at that, my bear case for Bitcoin is about 108. Okay. My bear case, meaning if it gets too big or there's some type of regulatory things or Kamala Harris gets elected, like 108 grand. My bull case on that asset would be about 1.75. So if I look at it, that means it doubles from 69, that's 140, right? Then I add another 35, it'd be about 180 grand. So about 108 to about 180 would be the range that I can, from a conservative side, do this.
Yep.
Now, could something change to make it go up to 250? Sure. Could you get Donald Trump that comes out and says, hey, we're going to buy $15 billion of Bitcoin for the next 100 days to build up a strategic reserve? That's a black swan. It could rip hard.
Yeah.
But without any of that happening, just the normal market playing out, 108 to 180.
Yeah. I love that. Wait, can you let's talk a little bit about that? Like, how do politics play into crypto in your opinion? Looking at, and correct me if I'm wrong, every halving is an election year?
Yes.
Okay, so.
And it was designed that way.
That's kind of interesting, right? So how do you think, this is obviously a big election,
Yeah.
right? Everybody can agree in the whole country, probably the whole world, that this is a big election. And everybody's very like one way or the other, right?
Yep.
I definitely am the same. I'm one way. So, Donald Trump spoke at the Bitcoin conference.
Yep.
So that's obviously huge. Is that the first time?
First time ever a U.S. president, former or current, has ever spoken at any type of a Bitcoin conference. And because the reason why that kind of came about is the fact is you have to understand that most people today, let's say between the age of 18 and 29, which is your swing vote, and here in the United States, 94% of that age group has owned Bitcoin or crypto at one point in their life.
Yep.
Okay. So we know that the best chance for any party to win is to get the people that couldn't vote last time to vote this time, right? So somebody that was 14 years old, which is crazy, can now vote this election, right? And we know traditionally speaking, like most people when they're younger, have a tendency to think of the mindset, I'm going to vote for the party that is going to give me the most stuff.
Yeah.
And then when you
free everything.
Yeah. But then when you start making your own money, you want to go with the party that's going to help you make more money, as well as help you preserve the money you make and give you the opportunity to help other people make money, right? That is how I vote. Who's going to help me make other people money, which is my employees, my staff, what's going to create that environment, okay? Number two is who's going to help me preserve what I have already worked my life for? And then number three, who's going to instill things that are going to reward things for people working hard rather than staying home? That's how I make my voting decision, right?
It's all about policy.
It's all about policy.
It's how people should vote.
100%.
It's insane. We live in a world where people vote with their emotions, not based on who has a better policy.
Exactly. And that's what's crazy. It's like, I say this all the time to people is like, I don't love Donald Trump as a human being the way he comes off. I really don't like Kamala Harris the way she comes off. I strip that away because then I'm being stupid. I'm voting with my emotion. Name the last decision you've ever made at peak emotion and you're like, that was the right decision.
And this is the person who this is arguably the most powerful human being on the planet.
Yes.
They run the free world. The United States of America. We're talking about here. So you have to remove your emotion.
And the best, I actually heard probably one of the best sayings for somebody that not historically has been pro-Trump, which is Joe Rogan, right? And he had a quote, and even though he's backing RFK right now, which I love RFK, I just won't throw my vote away for somebody that's not going to win. And he said the best thing. He goes, when I think what every American should do is imagine the company you work for, Do you want Kamala Harris to be your manager of that or the CEO of your company? Or do you want Donald Trump? Because at the end of the day, that's all that really is. Like that's who you should vote for. Right? Because at the end of the day, your job security, your life security is all about the policies they have in place, no different than the policies you have in your employment, right? And so when I look at that from a crypto perspective, right? The president himself has very little influence over cryptocurrency because it's global. However, what it has major implications of it is who is the chairman of the SEC and who runs the Treasury Department, okay? Those two positions. So everyone just a very thing to understand is think about this. The Treasury Department is who manages your money, right? The United States money. What do they do with your tax dollars, right? And how do they allocate it? What happens it, right? Just think of it like the CFO of your company, right? Then you have the SEC, right? Think of that person as your chief revenue officer. They're basically controlling what revenue's coming in, AKA the stock market, right? That's how most people's wealth is tied to, right? And then what you basically have is you have the Federal Reserve, think of them as like your HR department, right? Like that's the best way you can kind of think about it. So, however, the president influences, just like the CEO of that company influences who sits in those seats, right? So what I look at is, okay, the SEC chairman, Gary Gensler, is the worst thing that ever happened to cryptocurrency. He's gotten his butt kicked in court every single time. The policies he's putting in place in cryptocurrency, he is not able to defend. He's getting beat in court over and over again. Who is he appointed by? Whose boy is he? Joe Biden's, okay, right? Which is Kamala Harris's current office. Then we have Janet Yellen. Janet Yellen is also part of the Biden-Harris administration. What she has done is basically had a restrictive policy where basically they act like on the outside that they're not funneling a bunch of liquidity into the market, but on the inside, what they're able to do is they're issuing tons of debts to banks who are losing money. And so it's going in that way, right? So I actually don't mind her. So I'm not like, oh, I don't like Democrats, I don't like Republicans. No, I actually don't mind Janet Yellen because the reality of the matter is whoever controls the Treasury, as long as they're printing money, they're devaluing our dollar and making Bitcoin go up, right? And then I look at Jerome Powell, okay? And in his case, his job is to manage interest rates. He just done F that up. We all know he kept them too low for too long and he now kept them too high for too long. That's the reality of it. The best part is with Jerome Powell is he is now has his head on the chopping block. So regardless of whoever gets into office, of Trump and Harris, Jerome Powell, he's already going to be cutting rates. So that's good for crypto. No matter who gets into office, Janet Yellen is already coming out and printing money. It's already, we all know that. Most people don't know this week, the federal government quietly said, hey, we're going to start by issuing a tremendous amount of debt to start putting liquidity in the market now that something broke. That is why when everybody in the markets crashed this Monday, another Black Monday event, when Japan raised rates, which basically caused everybody to have to sell the assets that they borrowed in the Japanese yen at free money. And then guess what? They raised rates, made the yen go up against the dollar. Everyone panicked. The best way I can explain that because it's really important with the crypto space, is imagine everybody you buy a house and on your house, they go ahead and they say, hey, you can go ahead and put 5% down on your house. And we're going to allow you to only have 5% down on your house as long as your house stays and it's worth over $500,000. Well, then all of a sudden, out of nowhere, the United States dollar starts going up and getting stronger and stronger and stronger and stronger. Your house is doing good. You're like, sweet, my value, my house is going up. Now, all of a sudden, the dollar starts falling. Your house price starts falling. You get a call from your bank. They're like, yo, your house is worth $450. You got two options. Write us a check for another 5%. Or sell your house, you got to do it by tomorrow. Pick, okay? That is what leverage does. And that's exactly what the Japanese went. They borrowed from the Japanese yen. They bought all these stocks. And as soon as the stocks started falling in price compared to the yen, because the yen's getting stronger to the dollar, they had to start selling all their stocks because they had to repay this. Because who just has all this extra money? Just like what homeowner has an extra 5% sitting there? So with that broke in the system. Therefore, Janet Yellen has a free ticket to start pumping liquidity in the market, even though inflation isn't down. So I got Jerome Powell and I got Janet Yellen on the side of crypto. The black wolf is Mr. Gary Gensler. This is why election matters, because Gary Gensler is Harrison Biden's boy. Gary Gensler is the most hated man. If you watch the Bitcoin conference, when he mentioned he was going to fire Gary Gensler, he was crazy. Shocked. They went crazy. He's like, oh, you guys like that? Wow, I didn't realize he was that hated. So because what Gary Gensler is basically doing is he's that mean, strict grandma that is like, watching TV is going to melt your brain, doing this, that old school person that is refusing to change. And yet, when he has to go to court and defend his stupid policies, he gets wrecked, right? So Gary Gensler is the key, not Donald Trump or Harris. If Harris came out and said, hey, I'm going to fire Gary Gensler if I get elected too, even though I don't like Kamala Harris and I think she's ridiculous with some of her policies, I really don't care. Gary Gensler is what everybody should be focusing on because that is the ticket. Because if Gary Gensler is out of office, what that means is there's clear regulation. People, it's not that crypto's bad in America. What it is cryptocurrency, it's like having a mom that basically says, hey, I want you to do your chores. And you're like, okay, what are my chores I'm supposed to do this week? Figure it out. And you're like, okay.
And if you don't do it perfect, you're in trouble.
And you're in trouble. Exactly. And then you do all your chores. Think of everything you possibly could. You do your chores better than your brother, right? Your brother at the end of the week gets $50 and pat on the back. And you're like, he took out the trash and made his bed. Yeah. I cleaned the house. I washed your car. You did all that. You know what? I wanted an error sent in my car. You didn't do it. Smacks you on the side of your head and sends you to your room for a week.
Yeah.
That's Gary Gensler. And so getting that out, it's not that cryptocurrency wants leniency. They want the same rules and regulations as the stock market has, so they know what to follow. So that they're like, well, if you want me to capitalize the word of every single letter when I submit something to you, I'll do it. Just tell me it. Right. And so that is the key. And that is where this election is really going to matter, is what is going to happen to Gary Gensler.
Dude, so much value, man. I love it. Anybody who stayed, we're about an hour in. I have one more question because I said we were going to keep this one about an hour. By the way, guys, stay to the very end, okay? This is going to be a phenomenal question. What, in your opinion, Brian, do you see happening in the next, and I know it's going to depend on the election and everything, but when you look at the whole economy, real estate market, stock market, right? Do you foresee in any near future a real legit market correction?
No, I don't in the near term.
Okay.
I do not. Let me tell you why. So where I got most of my information is because people, I don't want you to think like, oh, this dude's like pretty smart. This, and that. I'm gonna tell you a secret. All I did was study Ray Dalio. I studied Gareth Soloway. I studied Michael Saylor, and I studied Raoul Pal. Those four guys are probably the best traders and investors of our generation that are not 147 years old, right? So they understand what's going on today. And I built my entire investment thesis on those guys who are way smarter than me and have a track record. So Raoul Pal is the best trader in Goldman Sachs history. Gareth Soloway has managed over a 20% annualized return in the stock market, and he's my age, 42. Michael Saylor had the best performing stock of the last decade. He's the only publicly traded stock that is of a decent market that beat NVIDIA. 1,300% annualized, 1,300% returns over the last 4 years. NVIDIA was 900%. Okay? Remember that. Ray Dalio, his average annualized investment on his returns on his hedge fund was 30% over a 30-year history.
Wow.
Okay? So that is where all of this comes from, right? So there's something that changed. So what most people make the mistake of, you ask anybody, we're going to get a massive real estate crash and a stock market crash because it's been going up for 10 straight years. And that's the way it works because I know economic cycles. It's 5 to 10 years of expansion, a year of peak, 3 years of recession, horrible 1 year, and it recycles.
Yep.
Okay. That worked. But there was one change. That worked when we didn't have debt, a tremendous amount of debt. And it worked when the world didn't have a tremendous amount of debt. As a household, do you operate the same way if you have no credit card debt versus you have $300,000 in credit card debt? Absolutely not, right? It's a completely different way and the way you hope things will be doing, right? If you have no credit card debt, you're like, I don't care, raise interest rates as high as you want on credit cards. Sweet, perfect. I don't care. You have $300,000 in credit card debt, you're like, you better not raise what percent one more time or I'm going to freaking go belly up, right? Well, as the United States, we're that household with $300,000 in credit card debt. So what most people don't understand is the way debt works. So that $35 trillion, that is not like we borrow it on a line of credit. What we do is we print money as IOUs and we say, hey, who wants to go ahead and let us borrow $1 billion and we're going to pay you whatever the 2-year treasury rate is right now. It's 2%. Hey, China's like, I'll do it. Well, the problem is China stopped buying our debt, all these things. So we had to raise interest rates to get people to lend us money because we either have to pay that back ourselves with our own interest. We basically, imagine you just being like, hey, wife, I need to borrow some money. Just give me an IOU and I'm going to put it in our account. She's like, okay, perfect. Well, okay, guess what? If I control that interest rate in my household, do I want to be paying myself a 5% rate that I have to pay on my debt? Hell no. I want a 2% rate. So when we had that debt, what happens is debt is issued traditionally in 1 year, 2 year, 5 year debt terms, right? Meaning at the end of that term, we either got to pay all that money in principal, just like at the end of your mortgage term, you got 2 options. When my mortgage term is up, I either got to 1, I got to pay it all off, or 2, I got to refinance it, right? Pretty simple. So just like a 5-year ARM, right?
Yep.
You got to pay it up. So what happens is all the money we borrowed between 2019 and 2022, interest rates were low, right?
Mm-hmm.
Really low. They were 0% to 2% on that debt. Well, guess what? 5 years from 2019 is this year. Okay. 2 years and 3 years. So 3 years are the most common term. 3 years from 2021, where rates are pretty much zero. Well, guess what? All that debt, it's just in the United States, $13 trillion worth of debt is coming due within the next 12 months. Okay. All that debt we are currently paying at 1% to 2%. Rates right now, federal funds rate is 5.25%. We're having to borrow money to pay the interest on the money we borrowed. Okay.
Yep.
That's how messed up it is. Now, as the United States, if we control what interest rates are we not going to drop the interest rates so we don't have to refinance that debt from 2% to a 5% rate?
Of course.
Of course we are.
Yep.
So this is something that Raoul Pal created called the Everything Code. And the way it works is in debt cycles, when debt is borrowed by a country at very low rates, and when that debt becomes due and it's a significant amount, they will not, if they cannot afford that interest payment, allow interest rates to be. So there's one thing I live by. When interest rates are low, crypto does well, real estate does well, and the stock market does well. Why? Because people can borrow at cheap rates and make bigger returns. I'll borrow at 2% every day and invest that in the stock market or a house all day long. When it's 6%, I'm like, I got to really nail this one to be able to do it. So what this means is we are going to go through a cycle where we're going to be dropping interest rates for the next year to year and a half. When that happens, a euphoria comes into the market. And that euphoria does good for all risk on assets, real estate, cryptocurrency, and stocks. Now, the only difference about real estate, the wild card of that, is if you are in a market with a tremendous amount of new construction and a tremendous amount of Airbnbs, we will also be getting a lot of that inventory on the market. So real estate, this is uniform, but every market is different, as you and I know, and I don't want to go down that rabbit hole. So this is what I do know, that between, call it in 2 months, and then the next year, we're going to be in a euphoria stage. Because it doesn't matter if Trump gets into office or Kamala gets into office, the last thing they want to do is get into office and come with high rates, high unemployment, and the market tumbling. We live on stimulus. Imagine how happy everybody was in 2020 and 2021 when they got those COVID checks. Where did they take all that money? Stock market and crypto, and they bought real estate. So in the short term, in the next 6 to 18 months, we're going to be in euphoria. Then after that period of time when they have to eventually, with the debt's $45 trillion, and we have that next wave of debt that needs to be refinanced, they're going to have a thing of themselves of being like, especially if the rest of the world stops buying our debt again, they're going to have to raise rates. And that next rate, that's why I personally believe that the second half of 2026 and 2027 are going to be pretty nasty years.
Yep.
And so that is how I base my thesis.
So you think we're going to just be doing great till 2026 or 2027?
Yeah, I think the markets and crypto and stock market are going to have a great year in 2025. I think the crypto markets in the latter half of 2025, just like they always do with your cycles, we're going to see a sell-off. But I want to make sure people know this. So there's 2 secrets to cryptocurrency and investing in cryptocurrency, right? Outside of cycles, there's 2 triggers that I watch for, and it works every time. Number 1 is you look, whatever cycle you're in, you look at the previous cycle. So the cycle in 2017, the peak price was like $19,000 for Bitcoin. When we get 2 weekly closes, so the market ends on Sunday around 5 p.m. And on the charts, it closes. When that price closes 2 weeks in a row, so you can go look in 2020, when that market closed 2 weeks in a row on Sunday at 5 p.m. Pacific time, and it closed above the all-time high of $19,900, 2 weeks in a row. When that happened, which was like in November, I think, or October of 2020, that is when the crazy bull run starts. And it ran really, really hard from about beginning of October to the first week of May. So we ran super hard for about 6 to 7 months. You go previous cycle, same thing. So what everybody who's sitting here listening, what they need to watch is wait for Bitcoin on Sunday night consecutive weeks to close over $70,000, that'll be the beginning of our bull market. From that point, you can go in, sure, well, you get a day here and there, it sells off. But when you look at when that happens, let's just say if it's on October 10th, let's say, you look at your account on November 10th, I bet you with 99% certainty, it's higher than what it was on October 10th. You look at December 10th, it's gonna be higher than November 10th. And you can do that. And that's your trigger to basically be like, I want to get all my money in by that time when I see that weekly candle double close. Then most people, and this is what wrecks everybody, when to sell. Because like you said, with real estate, if you only had like a month to really resell, to really max the price, that's a difficult thing, right? People are going to be in denial. They don't want to believe it when they're, it's not really over. My account's up double from what it was a month ago. It's up triple from where it was 3 months ago. There's a chart, and it's called, and I showed Austin this when he came by my office a couple weeks ago. It's called the Pi Cycle Top Indicator. Just Pi, like PI, Cycle Top Indicator. It works every time. Very simply put, there's two averages. And when these two averages cross each other, you get out of the market. It's marked the top of Bitcoin within 2 or 3 days every time. And you layer that in with watching when Coinbase becomes the number one in the App Store. If you see on the news, Coinbase just became number one in the App Store, sell every piece of cryptocurrency you have at that moment, even if you don't pay attention to the Pi Cycle chart. Every time that happens, in every single cycle, crypto drops 30 to 40% over the next 3 months. It's really that simple, but nobody knows it.
Yep. Brian, a lot of value today. Where do people find you, bro?
Yeah, so you guys can find me on Instagram. It's the Brian Decker, Brian with an I, on there. And then I have a podcast that drops every other Wednesday on YouTube. It's just, you can just go to the Brian Decker and find me on there as well.
And I was just on that podcast.
Yeah, you were.
So I think, are we live yet?
Well, it goes next Wednesday.
Next Wednesday.
Yep.
Okay, cool. So go check that out. If you're still watching the very end, I appreciate you so much. Go follow Brian, follow his podcast, and you're launching some cool financial stuff too. So stay tuned for that. And that'll be really cool. Brian, I appreciate you being on the show, brother.
Of course, brother. Have a good one, man.
Thank you for watching, and look forward to seeing you in the next one.